What's up guys, welcome back to my YouTube channel. This is Dr. Martin. It has been a minute since I've actually taken time to sit down to give you guys a lot of value from the experience that I've actually had in the past couple of years of trading. So in today's video, as you can see, we've got an interesting topic that we are covering, and I am focusing today on giving you strategies that can actually work for you. Whether you are a beginner trader or a novice trader, this can actually help you advance your trading skills and become better at what you do. So do stick around and do actually listen to the things and the strategies that I am actually giving you today. I will be going through my market breakdown, chart advices that I did actually see in the past couple of months of me backtesting my new strategy that I have actually implemented on my trading. And I do hope this actually helps you a lot. And if you are new to this channel, please do me a favor, do click that like button and do click that subscribe button as well. Drop down a comment below as soon as we are done with this video, and I cannot wait to share these gems with you. And let's go ahead, let's hit it, let's go. So before I actually dive into the charts, I do want to clear this out. A lot of people come into the markets obviously with huge expectations. They come with unrealistic expectations. There's a lot of things that we actually learn on YouTube and even in the day-to-day life that we actually go through. But on today's video, I want to really break down systems that I have put in place, both technicals and both psychological. So I need to obviously take you into the kind of trading that I do actually, do from a day-to-day experience and perspective. So I do want to say to you today that, what I'm going to be doing will really change your life or your perspective towards trading. And I do want you to actually listen carefully and really follow through the steps that I will be giving you. The first thing that people do when they come into the markets is that they want to obviously make a lot of money in huge millions. And sometimes that's really, well, not sometimes even, that's most of the time, that's not a realistic approach to the markets. But obviously over time, you can become a profitable trader that's able to obviously eventually take up trading as a full-time career. And I do want to give you systems, skills, strategies that are going to help you get to that point and that level of being able to become a profitable trader. Now, I want to cover strategies that will help day traders, that will help swingers, and that will help scalpers. These are systems that I use whenever I do train people to trade and whenever I do give people, advices here and there. Well, I meet a lot of people on the road and people ask me one thing: how do you make it? How do you do it? How did you become this person that you are towards the markets? And this is what I'll be unleashing for you guys and breaking down for you guys. I'm really excited. I haven't done a video like this in a minute, but today we are actually breaking the ice and we're giving you guys value that's worth watching. If there's anything that is worth watching right now, it's this video. So before I go into the markets, if you are watching right now, do share this video at least for people to see before you can see for yourself, because I'm really going to do like a lot of solid stuff in the markets. So I will be giving you like proper gems, and I will see you guys after this video. Do make sure that you do share this video. If you don't share this video, guys, I'm telling you, if you did not share this video before you watched what I'm about to show you, I don't know what's going to happen to you, but not a good thing's going to happen to you, so do make sure that you do share this video. And let's actually go look at the markets and let's dive into the systems and structures that I do use whenever I do trade. Peace out. Welcome back to the second episode of our US Daily Blueprint course. Once again, this is your mentor, Dr. Martin. If you made it this far, congratulations. We're on the second video. So on the second video, what I really want to do is I really want to immensely focus on structure and to basically be able to teach you and train you how structure works. So basically when we speak about structure, even as mentioned on the previous video, we're basically talking about how certain moves happen in the markets and why certain moves actually happen. So what I will be focusing on right now is to basically break down structure for you guys to be able to see why we are actually trading the way we are, and for you guys to actually understand the reasoning behind certain moves that happen in the market. Because my biggest wish and goal is to create a community of individuals who are able to trade and understand how structure works and why certain moves are actually happening in the market. So I think let's get to it. Let's get to it, guys. Let's get to it and let's see what we really do have on the markets right now before we can actually do anything else. So market structure 101 was basically an introduction of what I really want you guys to focus on this 202. So I want you guys to be able to then look at structure, be able to understand where the next move can potentially be, and to even be able to understand why certain moves are happening in the markets. And this is my very first lesson that I will do an immense training for you guys, because obviously on the first video, what I did is I really tried to cover a little bit of structure for you guys to basically understand. So structure is basically some market going up and down, pushes and pauses and all that kind of thing. But let's look at a deep understanding of how we can basically utilize structure and what we can really try to learn from that. So what we do have on the markets, I will be drawing this pattern over here, and I will be using the upward structure for you guys to be able to fully and thoroughly understand how the market would really move, even by looking at the pure and basic upward trend, or even whatever structure that I'll be drawing. But for this current and specific example, I will be using an upward trend to basically get my point across. So I do need you to note this down, that on an upward trend, the previous low is the most important thing, and on a downward trend, the previous high would be the most important thing. And you will be able to understand what I mean by this, even as I am busy trying to explain what I do have on my screen over there. So let's get to it. So market would obviously move from this point over there and pushes up, come back to pull back, push up, come back to pull back, push up. And this structure alone is suggesting to us that the market is basically bullish. And if the market is bullish like this, then you do know that you are obviously going to look for more buying opportunities in the markets. One of the biggest things that I want you guys to understand is that you're not trading a market that you are anticipating in your head, but you're trading what the market is really printing out, even in front of your eyes. So this is one thing that I really want to understand and also stress to every single one of you guys who's watching this video right now, to say that you are not trading what is in your mind, but you are trading what is really in the market. Specifically on US30, you do not want to take chances. You do not want to basically get to a point where you want to assume that the markets will go up even when the markets are actually not trending up. So on an upper trend like this, the previous low, as I did say, is what's important. Previous low is what's important. What I mean by this is the market can push up for as long as it wants, come back and give you a low that is slightly higher than the previous low, then the market would still be valid on its upward trend. Then the market will still continue pushing up. And the market can even pull back to test the previous low and still come to this area, come back to test the previous low, and then start pushing up. So what I want you guys to learn, even from what I'm saying to you right now, is that the market really did kind of hold on this previous low, and this is our basis for actually buying on this market. So the market held so nicely and so tightly in this instance that we're explaining now, and this is the reason behind us actually buying on this market, because the markets actually did really hold on the previous low, and this is our biggest reason behind our buying opportunities on this market if we're looking at structure like this. So I really want to come and focus more on structure and explain it using proper terminologies and using proper examples. So the market would come to this area, print out a low. So let's maybe assume that this line that I'm going to draw here is the market's pushing to this low, establishes a low, from this point breaks out of that current high. So if the market does break out of this current high, then the market is basically telling you that we are still continuing with our bullish trend. And structure alone is a lesson that you guys can potentially focus on and actually try to master on its own. So structure is one of the biggest lessons I actually do have and I actually do train. And the market can come back to test that previously broken structure, which is the most common formation in the markets, that the market can possibly come and test the previously broken resistance level or previously broken high and use it as new support for you to obviously be able to see that we're actually continuing to the upside. So you really need to focus really on how the market actually print out these current highs and these current lows, because these can actually determine whether the market is still going up or down. So you really need to put immense focus on these current levels. So we can see that on this specific market, the market did break out of this high. So as soon as you see break of structure around there, the market is actually confirming to you that this formation is actually still continuing to the upside. So that's one of our biggest confirmations that the market is still going up. Even when the market can still push up without us finding an entry over there, we're not late. That's one thing I really need to stress as well, that you are not late to basically find structure at the highest price ever if it broke past that previous high. So if the market broke past that previous high and you come into the market and you find that the market is here and your target was there, do not force yourself to come in at this point and basically take a trade and force things, because the market can still come back and actually create a low point before it can actually start going up, which is what we can see that the market actually printed. So whenever the market prints out a high, I need you guys to learn this, that whenever the market will print a high, you want to mark it out. Now, the reason why we mark it out is because we do understand that that current high that the market is printing can potentially be a zone and an area of interest when the market comes to around that level. What I mean by this is that the markets can actually break past this zone. Once it breaks past this zone, then can use that level as a level of support now, because remember that every broken level of resistance then becomes new support. And if the market actually does actually get to this area and fails to break past this area, then we do know that this level can be a level of interest for us to actually see what the market actually prints out for us, and we can be able to then take trades around that area based on how structure is forming at that current market. So let's maybe look at a bit of more examples from what I'm actually drawing for you right now. So the market can come to this area and then fail to break past that area and still come back to this area and fail to break past that area, which then validates our upward structure. Because remember that on an upward trend, the most important thing that we actually want to focus on is the previous low. So if this previous low actually does not get broken, then the markets can still continue going up, regardless of the fact that the markets didn't break past this zone. They can still come back to test the same level again before they actually break out of that level. Then the markets can actually break out of that resistance level to the upside. So why am I saying this? Why am I confident enough to know that the break out of this structure will be to the upside? Now, look at this. So if you look at this structure over here, you're probably asking yourself that why am I giving you this information for free, and you're annoyed right now that I'm disturbing you, but I'm really sorry, okay? I just want you to grow, and because I want you to grow, I will give you this amazing opportunity that OctaFX is giving you to win as you are trading. Now, OctaFX allows for you the chance to actually win one of 15 brand new MacBook Airs and at least one of these 200 match packs that are actually giving you. And all you need to do is to just trade, guys, right? You just need to trade. So to qualify to actually win one of these 200 match packs, you just need to at least trade a 0.01 lot, obviously. And to obviously qualify as well to win the MacBook Air, that is obviously up for grabs as well. You need to at least trade 3 lots, you know. So if you do trade these lots, you do qualify and stand the chance to actually win, amongst the 15 people that will be chosen on a draw that happens on the 29th of April. So if you do want to know more about this amazing opportunity, do click the link that's on the description below to actually qualify to be one of the people that do win. I do want you to win, and that is why I'm giving you this free information and knowledge that I'm giving you right now. And if you do want to see yourself win as well, ensure that you click the link on the bio and you will win one of these amazing prizes. And yeah, let's go back to what I was showing you. Peace out. Yeah, this can be, I need to put down an annotation over there to basically show you guys what I'm actually looking at. So this would be my initial market low. So that's what I will call that initial point. I will say that's my initial market low. The reason why I'm saying that this is my initial market low is because I want you guys to understand that that area over there is an area that the market started from. And obviously from there, we got a higher low, and from there we got a higher low. So I will say that's higher low A. I will say that's higher low A. Let me do this quickly. to create space and room for the other ones. So that will be higher low A. This will be higher low B. So I will title this as higher low B. The reason why I'm saying this is higher low B and this is higher low C. Now watch this. The reason why I'm saying this is because if you really try to take your time and look at the formation of these low points, you'll notice that the low points of this market actually did not get broken, which then validates our continuation to the upside to say that the market is still validly trending up. So that would be our initial market high, initial market high. And over there, we would obviously have what we call a higher high. And if you really try, so if you really try to edit that as well, you would say that's higher low A, because obviously market didn't really break out of that level. So that's higher low, that's high A. So we can potentially say that that's high A. And obviously around this level and region, we can pretty much say with confidence that we do have high B. Now, the reason why I'm saying this is high B is because also that high price that was printed over there was never broken. And over here, we've got high C. So the logic behind this annotation, I will explain in a bit for you guys to be very clear on why I'm actually marking out my charts like this, for you guys to actually know and understand why I'm actually doing this. So the market will come over here, create an initial market high. From that initial market high, the market will come and create an initial market low, initial market high, and create a low that is clearly higher than that previous low, and go create a high that is higher than that previous high, higher than the previous high, and obviously this low is higher than the previous low. So if you look at this low price that was printed over here, this price held throughout, meaning that this low over here is still around the same area. It's still affected and influenced by the same low that we had at this point over here. So what we do have here is the same price that's actually holding even here. And that's the exact same price that's actually still holding even here. And the high that we have over there is the exact same price that is holding even on this market over there, and even on that market over there. So now then this becomes a high that holds throughout. And until this high is broken, then we cannot confirm our buying opportunities if we missed the buys from the low points. Because remember that in the Forex industry, you really need to train yourself that you're honestly buying low and you're selling high. So if the market comes and prints out a low point for us to be able to then take our buys from, then this is an area and a region in which we want to actually take out our buys and to actually see how these buys are actually playing out based on the fact that this market is actually holding on the lows. And if we miss the entries on the lows, then we can actually obviously look at buying upon the break of structure on the highs. So at this point over here, we do have that market breaking past this current high. So the market broke past this current high over there. So we do see this happening over here. So this is what I personally call break of structure. So even for the guys who are actually returning students, I need you guys to understand this, that this is what I personally call break of structure. So break of structure basically means that this structure that was actually holding throughout over the past previous highs has actually been broken over here. And I need you guys to fully understand this, that the structure then gets broken around there. And once structure gets broken around there, then this gives us confirmation and the confidence to hold our buys if we really did buy from the lows, because obviously we do want to buy from the lows. However, if we do miss our entries from the highs over there, then we really do want to find our entries on the next possible low price that the market will actually print out. So if the market breaks out of a high, This doesn't necessarily mean that you're low on actually trading. This basically means that the market is basically confirming to you that this structure is actually holding, and your anticipation of an upward trend is being validated by the fact that the market is breaking past that current high that we currently have in this particular market. So what we do have over here is that the market did break out of that brace, out of that that ranging structure. So as the market breaks out of this structure, then this obviously confirms that the market is actually bullish. Again, I need you guys to understand that there's two types of breaks of structure. The first break of structure is obviously the break of the previous high, and the second one would be a break of an upward trend or even a downward trend. That's when structure will actually be broken. So the reason why I'm saying this is a break of structure is because remember that even a ranging market is one of the trends that I spoke about on the previous market. So the market will then break out of that ranging market to actually give us a continuation to the upside. So if you see a range on a bullish market, it's very easy for you to predict where the breakout can possibly play out into. The markets can actually break into the upside. If you do see the market ranging like this, in this case, it will actually break out to the upside. So we did get our break of structure over there. So I'll delete that just for a second and obviously come back to our structure that we have. So the market can actually now come and use again that previous level of resistance from the left as new support and go and create another leg to the upside. So if we look at, if we really try to look at what's really going on there, and we try to put annotations on there as well, we can see that from this higher low point, we did have a higher high over there. So I really need us to understand exactly what is happening over there. So we did have a higher high from here. This is what we would call a higher low. So the market printed now a higher low over that point. And obviously, when the market pushes up over there, it will actually create a higher high. So now I really need to then come back into this area and region to show you a little bit later on how you will know that this is the exact higher high price that you're looking at, and how do you see that the market is now turning back to actually print out a new swing low. So from this point over there, this is reality of what the market can do. Remember that this is from experience, and this is from the 4 years of trading that I've been in, and the experience that I also have on US 30. So what I'm teaching you right now is something that I am quite sure that will actually play out, and is kind of most likely to play out exactly in this way that I'm actually showing you. Now, this works through all instruments. It works through all industries. So you really need to understand this and basically need to try and see how these guys are actually printing out price. So from here, you will get this market forming like that. And from this region, the market will come and obviously create a slightly lower price for us to be able to buy. Because remember that the structure is still holding, in the sense that the market is creating higher highs and higher lows, higher highs and higher lows, and so forth. So if the market is actually kind of creating a series of highs and lows that are obviously higher than the previous highs and lows, then the market is still validly trending up, and we can potentially say that the market is bullish on that current market that we're actually on. And the markets over here can come create that high, and this pullback can either come and be over here on the previous high, or even here, or even go as far as going back to that previous level before we can actually start going up. So from here, we can see something like this, that the market will come back and test the exact same area and region in which we just tested again. So if you look at this properly and thoroughly, this goes back to what I really spoke to you guys about, to say that if the previous low is not broken, then you do know that the market is still valid in its upward trend. So this is one thing that you really need to understand, and also pay very close attention as you are trading, to say that you really need to understand whether the market breaks out of the previous low or not. And if it doesn't really break out of a previous low, then the market is basically telling us that we are still validly trending up. So for trend line traders, this is why I hate trend lines. So for everyone that follows me, you guys will know that I hate trend lines with passion. So someone out there will come and draw a trend line over there like this. And over here, trend lines basically tell us that if you see something like this, then that would be a break out of a trend line. And obviously for most guys who are using trend lines, you guys will obviously look at a trend line breakout and you will use that as your basis of buying or selling on whatever markets you are trading. So I really don't want you guys to actually look at the markets from that perspective. I really need you guys to expand your eyes and to expand your views on trading and not just look at the breakout over there, because the breakout over there would have been the reason why you guys would obviously sell or buy in this current market. So if you see that type of a breakout on the trend line, then obviously for most guys, this is their reason, their number one basis on why they would be selling in this market. Because why? They saw a breakout in that trend line, and once they saw a breakout on the trend line, then they would obviously look for a continuation over here. So the market makers can even give you some kind of a rejection over here, because they do know that somewhere in the world there's someone who's looking at that trend line for entries going to the downside. And this is not how we actually trade. If you are a student of the doctor and you are a part of Regenesis, this is not how we trade. How we trade is we want to understand structure, even as we are using trend lines, to basically understand structure in confluence with our trend lines. So our trend lines, we will be able to actually talk about them a little bit more later in the lesson. So you actually want to focus a lot on the horizontal levels and to basically see whether the highs and the lows are holding in the market for you to basically confirm whether we are buying or we are selling. So in this case, we can see that the market came to print out a low over there and came back again to print out another low over there, which then confirms to us that the market is actually now holding on that current low points that we're actually looking at. Now, I don't want you guys to be traders that actually don't understand how certain moves happen and why specific moves are happening in the markets, but I really want you guys to be traders that honestly understand why certain moves happen in the markets, and for you guys to actually be profitable and consistent in your trading. I'm so sorry. I'm giving out signals over here, so I will be a bit distracted, but pardon me on that. So I just took out a US 30 signal and it's holding beautiful, 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 beautiful profits. So please pardon me right now. I need to update the group and also update my stops. Okay, that's done. So this is a higher low price that was printed. So that would be higher low A, higher low B, obviously, because we're in the same level. So once a low point is not broken, we do not assume that the market will go the opposite direction, especially on an upward trend. So the market can come break past that high. Look at what these guys can do. So they can come break out of that current high. Remember that I said to you, every single time the market would break a high, we want to actually mark it out. So we did mark out that high and we did see that the high was broken. And this is where most of us would have expected the markets to basically retest. But in reality, that's actually an area that held so nicely. That's an area that we could have potentially sorry about that. That's an area that we could have potentially utilized for entries and to basically help us buy longer. But if you look at what happened here, the market actually really did close below that level before we actually saw a continuation to the upside. So this was 100% impulse and this was 100% correction, meaning that the pullback of this push took exactly the same amount of push it took for this market to move from the low to the high. So we do understand this, that the market from here gave us a higher high. So the market will still give us valid higher highs as it's supposed to. So it will still give us valid higher highs. And at this point, we did get a super valid higher high, even as you guys can see. And then from here, we do have a higher low point over there. And from that higher low point, we really did see the market pushing up to a higher high, so we do have the next level going exactly to the higher high. So we can see that the market really is respecting structure and is still giving us valid highs. So I'm doing this, and the way I'm drawing this, I'm very careful on how I'm doing this, because I want you guys to understand that this is exactly how the markets can actually print out. And this is how you can obviously expect specific moves to actually occur in the market. From here, we can see that there was a breakout from that current high that we did have from the previous market. And from there, what we could potentially look out for is for the markets to obviously pull back a little bit, either to here or even to that previous high. The market can still do that, and go back up again to that level, go back down again to this level. So remember that on an upward trend, what you're looking for is that previous low not to be broken. So the previous low must never be broken. They can even come there to give you a fake pattern. If you look at this, a lot of people would say this is a shoulder and that's a head and that's a shoulder, and the markets can still come back to this low again, break past this low, go to that high, come back to retest this level of support, and then from there we can see the market rallying to the highs. So on an upward trend, I really need to stress this, that the reason why we will not stop buying in any kind of market is because these points have actually held so much. So look at how this point held, look at how they came back even around here and held again. Look at how they came back around here, held again. Look at how they came back around here, held again. Look at how they came back around here and held again. So the markets have been holding even on the lows. So the lows are an important segment and part of our trading, because we want to understand how the market behaves around the lows and also behaves around the highs. So the markets, if are trending up, we must see a valid zone holding like that. So obviously even here we do have so this will be a higher low, obviously in brackets that would be A, because obviously we can see that the market did come to the same level quite a couple of times, like a couple of times, to actually give us rejections over there. This would be higher low B. I really hope you guys are understanding this, because this has to be the most important lesson that I will ever teach you in the whole course of US 30. So this will be higher low C. So the markets did really hold so nicely around here. So you can see that we did have higher low A, B, and C. And I want you guys to see something even as I'm analyzing over here, because this is also something that people struggle with even as they are trading, to say that this is what I saw now, so what do I do? So from here we can see that's higher high, obviously in brackets B, because the previous high and the current high are almost at the same level, or are at the same equivalent level. So the markets did give us that A point over there, and we did get the B point over there as well. So market is actually kind of maintaining its structure in its bullish run. But however, all of a sudden we have a change of structure. The market then comes and gives us a lower high. So the market gives us a lower high. From that point, I want you guys to ask yourselves this question: would you sell because now the market is printing out a lower high, or would you rather wait for the market to break that current low before you can actually start selling? So I would rather wait for the break of structure. Sorry about that. Rather wait for the break of structure around the lows for me to actually be able to then take my buys to the highs, or even my sells to the lows, depending on how the market reacts over there. Then this low then becomes our decider whether we are going up or we are going down. So I would really try and focus and see what is really happening around that region for me to basically decide whether I'm still buying on this market, or I'm actually changing my sentiment to sells around that area and that level. So let's look at what we do have here. We can see that from this higher low point, even as we did receive a lower high, we did get a higher low point still, meaning that the markets never really broke out of that low. From that point, you can see how beautifully the markets pushed to the upside, and we did get our higher high point over there. So from that high point, we obviously did get our higher low point as well. And now the market is giving us a beautiful, beautiful formation. From there, we will be anticipating a higher high, anticipated higher high. So that's what I would honestly expect on this current market, to see if the market will go and actually give us a higher high or not. Even if this move wasn't there and the market was like this, and I could see a clear rejection on that higher low price, then I would then look out to actually taking further buys to the upside, anticipating the next higher high. Now, coming to these areas and levels and regions, what candlesticks do we look for? What is it that we actually look for, and what is it that can tell us that the markets have actually rejected around these levels and those regions? I will come and cover this as well a bit later when I'm now covering the actual trading. But for now, I really need to cover this because I don't want us to actually move on from this without actually exploring and experiencing this full move. Sorry about that. The full move from this area. So I really want to go through every single thing that you guys will ever need to know before we can basically move on to the next segment and aspect of our trading. So around these areas and regions of lows and highs, the market will give you specific formations to basically confirm to you that the market has actually reached its peak or its trough. So we do have a couple of candlestick formations that we look at, and these candlestick formations are formations that basically help us to get to understand whether the market is still kind of going up or down. So the number one thing that I need to mention is that the longer the wick at the bottom, then the market tells us that this is buying pressure, and the longer the wick at the top, then the market tells us that this is selling pressure. So one thing that you need to know is that around these levels of the highs and the lows, the market will come and print out a series of wicks at the top and at the bottom, confirming to us whether we are still valid or not on our sentiment and our prediction. Remember that this is a game of probabilities, but even in your probability, you want to be a master analyst to basically know whether the market will actually go up or down from where you are actually analyzing from. So from here, what we will see is we will see common formations. So I will draw this. So these are common formations that we'll find at support. So you will see that common formation, and from there you might have a clean rectangle forming over there like this. So confirming to you that this candlestick, this market is actually rejecting at support. So at support, this is what you will expect, that the market will come and pierce through that zone. So if you do have a zone over there that's already marked up, the market will come and pierce through on that zone, and obviously from here, then the markets can actually come and print out a confirmation candlestick to say, now the markets are going to start pushing from that level. So you will have something like this. This is exactly the formation you are actually anticipating. So you would have something of this nature forming, that the market will come again, spike that level over there, and to eventually give you confirmation that we are actually now going to start pushing up. So this could be a bit longer than you're thinking. So this could be a bit longer than you're thinking, because obviously the market could now be confirming, the buy that you are seeing, and the markets could actually come and give us an engulfing candlestick to basically confirm to us that this is actually going to be a market that will start pushing up from this point over there. So these are the kind of patterns you're looking at, where you will have market pushing down. The market will be pushing down like this, pushing down like this, pushing down, and all of a sudden you get maybe one candlestick spiking through. So you can get two of these candlesticks spiking through this level to confirm to you. So you would have something like that, and obviously this would be a candlestick like that. Pardon me, because I really need to explain this. So you would have something like that, and from there you have another one over there, and you've got a confirmation candlestick, and you can then take your buying opportunities to the next higher high. So all of this is confirmation. If you see the market wicking multiple times around that low point that you've actually drawn, then you can actually confirm and conclude that the markets did try to actually break through that level for a couple of times, but obviously they did fail to break past that level. This is one way to actually confirm that the markets have actually finished with giving you that formation on the low. So from here, you can actually look into buying this market all the way to the next anticipated high. This is exactly what you need to understand. The reason why I hate trend lines again is because you would have had something like this. So look at how deceiving trend lines are. Like, you would have had something like this, the market sells over there, and then from here you're still looking for sells, but to only find out that the market is actually still trending quite valid. So you really need to understand the markets from the structures perspective before you can move on to the next segment of adding other tools to help and assist you get trades. In my own perspective and opinion, market structure has to be the biggest thing that everyone and anyone has to understand, because once you understand structure, then it's very easy for you to utilize all the tools that we will be training you to basically be able to find a trade. Because most people actually know how to analyze, but people actually don't know how to trade. Because if you look at structure and you look at these things that you draw, your support and resistance, and if you don't understand structure, then it sort of becomes difficult for you to actually be able to take a trade based on market formation. So the other things you would add on your charts are basically helpers. They are not the main thing. Your support and resistance is not the main thing. Your trend lines are not the main thing. Your main thing you want to actually focus on is your structure. So if you do have a structure that has actually formed nicely, then you can potentially take a trade based on how structure has formed, and you can be able to then profit from whatever prediction you are basically looking at. So it's really, really, really important to understand structure. I cannot stress the importance of structure, because structure has to ultimately be the best thing that you will ever help yourself to understand. Once you go structure, you will never go wrong. Once you go the structure way, you'll never go wrong, because then structure helps you understand why certain moves are formed and how certain moves are formed, which is my intention, to basically help you understand structure even without you looking at trend lines and support and resistance to come up with the trade. But you can just look at the market structure and be able to know where the market is going exactly at that point you're actually analyzing. And this is something that I hope you guys really did understand, even from this video, that you really need to focus on growing yourself as a trader and actually understanding how structure works before you can basically take any sort of trade. People focus on the wrong things. People really try to focus on understanding support and resistance levels, understanding trend lines, but that's honestly not the main thing. The main thing you actually want to understand is the formation of structure and how certain moves are basically formed. If you really understand this, how this was actually formed and how I actually drew this, then you stand a very great chance for you to actually be a profitable trader. Remember what I said. I said to you that on an upward trend, you really need to consider the previous low. So if the previous low is holding, then you know that the markets will still go up. And on a downward trend, this would be the exact same thing, but on inverse. So if you look at a downward trend, this would be the exact same thing now flipped over. So this would be the case. So sorry about that. I just need to do this. So this would be the exact same thing, but now flipped over, to say that the markets will still respect the previous high. If it doesn't break out, then obviously the previous high has to be the most important thing that you're obviously looking at. So this would be a lower high, lower high, lower high, lower high, and lower high. So you really need to understand this, because if you fail to understand this, then you stand a greater chance of actually losing more capital and trading things that actually do not even exist. So guys, I really hope you guys really learned a thing or two from the lesson that I gave you, and I will be going a bit more into other elements on how to actually understand US data, what is US data, and other components and composites that you really need to understand on US data as a whole. So be on the lookout for the next video, and I hope you guys are taking notes, and I hope you guys are really learning, and I will see you on the next video. What an amazing video with amazing information. I'm very sure that if you got to this part of the video, you've actually enjoyed every single thing that I have taught you right now. This is obviously a part of my course that I'm giving to you for free, and I'm really happy that you got the chance and the opportunity to watch this amazing information and piece of knowledge. Now that you've gotten to this end of the video, do not forget that you can click the link on the bio to actually win one of these amazing prizes. And once again, I cannot wait to see you again, even on the next video. Do share this video video. I mean, you've actually learned quite a lot, so much information and knowledge shared on this video, and you still don't want to share it. Come on guys, like, come on, share this video, and do drop a comment down below. Let me know what you did think about today's video. Also do subscribe, ensure that you actually you know, grow this channel. We're like over 30,000 or below 30,000. I can't actually like quite remember. But thank you so much guys for supporting the channel. Thank you so much for always being here, and I will be dropping another video that is obviously similar to what I did drop today. But this is Dr. Martin once again. For a change, let me stand up. Peace out.